Who would have thought it, with all of the hand-wringing that Nvidia is so important to the S&P, to the NASDAQ, of 8% weighting, the benchmarks are higher, even though the name is down.
Yeah. You know, at the beginning of the week, we kind of said, yeah, move over, Powell, here comes Jensen Huang. And you're really kind of seeing the markets just kind of not really react to NVIDIA's earnings last night. And I think it's because earnings were positive. As Kanjan mentioned, you know, the wow factor is starting to come down because the hurdle rates are getting higher. It's getting harder to achieve that. But overall, the delivery of profits and outlooks last night from NVIDIA were solid. And so I think the market is starting to kind of look forward and say, hey, everything's okay with big tech. We're going to move over the next couple quarters. Macro is obviously going to be a concern coming here over the next few weeks, and as we get rate cuts from the Fed later next month. But I think the story in big tech is less homogenous trading. A little bit more focus on, you know, where's the payoff for AI? What's the supply and demand build for companies like Nvidia moving forward? And I think it will likely provide opportunities when we get some of these pullbacks for investors to reassess and maybe look at stocks that got away from them earlier this year.
Would you say that Nvidia, I don't want to go into individual names, but would you say at these sorts of valuations, when today Apple, Microsoft, Amazon, Meta, Google, Tesla are all the top performers in terms of points in the S&P 500, should you be racking up more in technology with valuations at these levels?
You at the top, as you said, like equal weights in these companies and in technology, just holding an equal weight is 30-40% of the S&P 500. So I don't think you need to get over your skis around, you know, extending positioning in these areas. But when we do see pullbacks in these big tech leaders, this is the time to start looking at them, at least if you've underweighted the area. Our view is that there is a broader group of stocks that are more attractive. They're particularly more attractive as earnings growth expectations are moving higher for areas outside of big tech. The economy seems to be on firm footing. The GDP grew by 3% in the second quarter, and the Fed is likely to start their moves to lower rates over the next few months and few quarters. So the outlook for the rest of the 493 stocks that aren't the Magnificent Seven are starting to look more attractive. And that's what we're seeing this month. Consumer staples, healthcare, utilities, they're all at the top of the charts for August. And that might be because September is a pretty poor month for the market.
Anthony, that's a pretty sweet Bloomberg terminal chart over your left shoulder. What is that? That's Nvidia quarterly revenues.
That's right. That's right. And as the chart, if you can see it in the back, it shows the actuals and the estimates starting to get closer. And I think that's why you're seeing Nvidia have a little bit more trouble start moving higher, even though they had great results last night.
So bear with me. I have a chart of my own. Let's bring it up. This is the beat in the quarter relative to expectations. And I think the point is that it was a 4% beat against consensus, right? 4% upside surprise. Have you ever experienced a quarter like this, where everyone has just lost their absolute minds over a single name in a week where we had central bank speakers left, right, and center, and more economic data than we can fit into a 1-hour program?
Yeah, no, I mean, I think the last, and you saw that volatility spike in early August. Some of that was the Japan yen carry trade. But I do think expectations are really high in these big tech magnificent names. And so not only do they have to surpass and kind of meet the perfection standards that investors put on it, but they actually need to surpass them by even more. That's getting harder. And so as my earlier comment said, I think you're going to see less homogenous trading between some of these big tech leaders. And it's really going to come down to fundamentals and capital spending and what's the revenue outlook, how much are you beating? Those things will play a much more dominant role in moving share prices around. But at the same breath, you have a lot of stocks that have not kept pace with these big tech companies that remain attractive in an environment where we're growing. And so if the Fed is cutting interest rates and they can kind of engineer that soft landing, there's a lot of sectors of the economy that are more attractive today.
So let's finish here. In aggregate, Nvidia and everything else that you've outlined, do you believe that this cycle, the investment cycle around AI, is intact and it continues?
Yeah, I think, and from your interview with Jensen Huang, I think it's very clear the AI infrastructure build and the architecture around that is in the very early innings. Some of these companies like Microsoft, Amazon, Meta, Alphabet, they spent almost $60 billion in the prior quarter on AI investment. They said they were going to continue that over the next several quarters. And so as these companies and as, sovereign AI that Nvidia mentioned last night, as these countries start to build that infrastructure, there is a lot of opportunity still left in AI. However, like the tech boom in the late 90s, early 2000, we go through periods where expectations get really high. They need to reset, and then maybe stocks can move higher from there. And I think we're starting to see that now with big tech and the AI theme.